Hello everyone. Today we're going to have a brief market recap, then talk about the ECB meeting, U.S. housing starts and the Philly Fed index, U.S. oil inventories, Yellen's speech, and Chinese GDP. This is Marshall Gittler, head of investment research here at FXPRIMUS, bringing you my opening market comment. The trend overnight was mean reversion. The dollar was stronger and the yen weaker. Sterling fell slightly too. President-elect Trump moderated his earlier rejection of the border tax, while Fed Chair Yellen was hawkish. Her comments pushed up U.S. interest rates, which supported the dollar. Now, the biggest mover among the major currencies was the Canadian dollar, which plunged. The Bank of Canada held pat as expected, but both the statement and the press conference afterwards stressed the low inflation and the risks. Furthermore, Commerce Secretary nominee Ross stressed the new administration's urgency to rework NAFTA. That hit the Canadian dollar and the Mexican peso. Well, for today, the main event is the ECB meeting during the European afternoon. With credit growing and inflation at least back into positive territory, no change in policy is likely. The meeting, therefore, might pass without causing too much volatility in euro-dollar. However, the minutes of the December meeting showed there's significant disagreement within the Council. Now, given the big jump in CPI in December, I think there could be a more hawkish tone to the statement and to ECB President Draghi's comments following the meeting. That could support the euro. U.S. housing starts and building permits are forecast to rise somewhat, which would probably be taken as a good sign. But that could be offset somewhat by a lower Philly Fed index that comes out at the same time, particularly after yesterday's lower than expected Empire State Manufacturing Index. Net, perhaps no impact. Now, U.S. crude oil inventories are expected to decline, as is usual this time of year. The API stats that were out last night showed a much bigger decline than what the market expects for the Department of Energy figure. So there's a possibility of a bearish surprise. Fed Chair Yellen is scheduled to speak at the Stanford Institute for Economic Policy Research. She's not likely to say anything different than what she said yesterday when she told her audience that the U.S. risks a nasty surprise if it waits too long to raise rates further. So this isn't likely to be a major event. Finally, we get the Chinese GDP figure and the other indicators that always accompany it: industrial production, retail sales, and fixed asset investment. Little, if any, change is expected from the previous period. In fact, if the forecast is correct, China's GDP will have grown 6.7% year-on-year for not one, not two, not three, but 4 consecutive quarters. Really stable growth. It could bolster confidence in the Australian dollar and New Zealand dollar, which have been doing quite well recently. This is Marshall Gittler, head of investment research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.